What's up, guys? Welcome back to Roensch Capital Charts. Today we're taking a look at PayPal, ticker symbol PYPL, on a variety of time frames in anticipation of tomorrow's trading day, Friday, January 26th. Now, PayPal today, of course, had its, quote, Innovation Day event. That was midday today, of course, where the big sentiment shift occurred. Just a week ago, PayPal's CEO appeared on CNBC in what I believe was his first public interview, and he promised to, quote, shock the world. Now, at this Innovation Day event, they did unveil some new AI-driven products. And being that this is a shorter-term analysis video, I do these videos every single day. This is a brand new channel, by the way. I'm bringing it back old school to how I originally started the Roensch Capital channel here on this channel, Roensch Capital Charts. If you get value out of these videos, please subscribe to the channel. Maybe leave a like on the video. Helps out tremendously with the algorithm. Thank you. But that being the nature of these videos, we're going to focus, far more on the data, the trader sentiment, and the short-term mentality, rather than how this may affect the very long-term outlook of PayPal as a stock, like the multi-year, right? This is a video as we head into tomorrow, Friday. So listen, here's the 1-minute chart, and we get a lot of context by looking at this, but let's zoom out now, and we'll go through the time frames. Here is the 5-minute chart, and what I find really interesting here is that right before, of course, we broke down into the very high 50s just incredibly briefly, but we actually ended up consolidating very well in the mid, 60s, $60 range, right? Like 60, 50. That range, we consolidated incredibly well into the close, finishing from, that peak of today to now, down about 5.75%. And if we look here, of course, to now, yesterday's close to now, down about 3.75%. Now, that's a good thing to see consolidation above 60 for a variety of reasons. I'm going to share with you why here in a little bit. It's not just the dollar level. There are a variety of levels. So let's look at those levels. Let's start here on the 30-minute chart. Of course, you can see here, the 50 period moving average, the gray lines, the 200 period moving averages, the very basic moving averages with by far the most eyeballs on them on each time frame. Remember, as traders, if we're going to put a trade on, we want as many things in our favor on as many time frames with the most amount of eyeballs on those particular indicators on those time frames as possible. So as far as things to look at here on the 30-minute chart, that 50 period, you could argue, has been seen as somewhat of a level of resistance. However, I think it would be hard to really make an argument there, the same way you could potentially argue the 200 period being a potential support. However, a lot of this is going on in after hours and pre-market. The volume is by far lower. We have to weight that a little bit lower than actual hard tests during regular market hours. So let's now go to the 4-hour chart and take a look here. As far as things to watch on this chart, I think really the only thing that pops out to the average trader's, eyeballs, their brain, which is all I really want to consider. Again, self-fulfilling prophecies are our friend, right? Is that $63 region, but there's also supporting factors on that from a variety of other indicators. Once we zoom out here to the daily chart, which I think is the most important thing to look at here currently on PayPal. Here's what I'm looking at and what I was discussing with the group in the Roensch Capital Gold server here today. As we entered the time frame for the quote-unquote Innovation Day event, we were sitting right at about 63, 63.50, 64. That region, right above that technical level of $63 a share, and here on the daily chart, that gray line, the 200-day moving average, probably the most popular indicator in all of trading. Now, do I care that it is popular? In a roundabout way, because I care that there's eyeballs on it. I don't care that a lot of people, think it has some kind of meaning because it's 200 days. All I care about is that institutions, funds, and other traders are watching it and making decisions based on it. That's all I care about. Right? Now, ideally, I would have loved to see $63 a share hold after this event. But you guys know I'm a multi-trading day kind of guy to see confirmation on things like this. And I was discussing with the group today that if we end up seeing a sell the news mentality after the event, which of course is what we ended up getting, we have that 50-day down right at around $60 a share, which also in the recent past has been treated as somewhat of a technical level. So we have another lineup, right? We have this lineup here, 200-day moving average and 63, and now here the 50-day moving average and 60. So here's the mentality that I'm looking at, because I want to lay out a potential bullish and potential bearish scenario for everybody. I know some of you are positioned each way, right? From a bearish perspective, clearly you bears you have one thing in mind: break downside through 60, but that's not all, because that occurred today, right? And remember, multi-day trading kind of guy, hold below 60 is what you guys are looking for. If 60 continues to hold as a support, that becomes an enemy level to the bears. But a break downside isn't just a break downside of 60, it's a break downside of the 50-day moving average. And again, I will repeat, this should be a multi-day hold and ideally a retest upside and rejection. Okay, that shows that we broke, we held beneath, we got a lot of volume in to confirm the market agrees, we got an upside test, and the market again agreed that 60 is now a level of short-term resistance, whereas previously it was expected to act as a potential support, and did today, right? We got that consolidation into the close. Now, clearly, if you're bullish, you're looking for 60 to hold, but the same way that the bearish mentality would be looking for a break of 60, understand that a lot of bulls on that same break, hold, and retest of 60, you know, that they might be treating that as a place to cut if they're trading this stock, not necessarily buying for the very long term. But from a trading perspective, to me, that's by far the most obvious place to cut the loss on that particular trade. And if you're a bear, bulls cutting losses supports your thesis to the short side. Now, from a bullish perspective, again, hold 60 as a support level in the coming days. Ideally, work our way back up to 63, gap through this channel, you know, not necessarily overnight gap, I just mean move quickly through this channel, which stocks tend to move quickly through channels. It's not uncommon to see. Make an upside test of 63, which would not surprise me if it acted as a potential resistance area, as we have that technical dollar value level and the 200-day lining up in that region. And then you bulls would ideally like to see in the coming, you know, let's say like 3 to 10 trading days, like 3 days to perhaps 2 weeks of trading, depending on how long we spend in this channel. You know, if we spend any time in this channel rather than just breaking downside from here, you bulls would be looking for a break upside through 63, back test, claim as support, the same way, just opposite, right, as the bears are looking for. Claim 63 as support, and then work our way up out of that hole. In the same way that you'd see bulls cutting losses on a break and hold downside off 60, I think you'd see a lot of shorts cutting those trades on a break and hold of 63 as support, which supports the long thesis, right? This all really in the short term, guys, comes down to psychology. Being able to manage our risk perfectly and consistently, and more often than not, being able to read what the money traders may be thinking in the near term, okay? It's a very different style from investing from a fundamental perspective. It's incredibly different. Now, those of you trading options, just be aware, implied volatility compared to about a month and a half ago is elevated. So that's elevated IV crush risk for option traders that are buying options up in this range. For those of you who perhaps own options that you bought in mid-December, you have, you know, probably gained some value from Vega. You know, delta, theta aside, that Vega value has pumped a little more air into your contracts, all else held equal, right? So just being aware that in that shorter term time frame of about a month and a half, that like 45-day time frame, if you're trading shorter dated options, just understand that this being higher now compared to the equilibrium in that time frame, remember you always have to compare it to itself and its relevant time frame for implied volatility. There is slightly elevated IV crush risk for options buyers and holders right now. For options sellers, that's a benefit, right? You like IV crush if you're a seller of options. Let's take a look now at the options chain and see what the options traders are thinking in terms of sentiment here today, because I expect we got quite a bit of volume in the second half of the day. Now, before we jump into the call per ratio, as far as unusual options activity on PayPal today, which again, I track every day and I alert to the Roensch Capital Gold server for Gold Plus UOA members and above, the only thing I saw today come through on PayPal was about $1 million worth of 2026 calls right off the open this morning. And I didn't even alert it because that's not entirely unusual, okay? But I thought that was interesting to not see a whole heck of a lot of incredibly unusual activity in the chain on a volatility day like today. But looking here at the call per ratio, this is really interesting. Good sample size, 660,000 contracts traded, 496,700 calls, 163,770 puts. That is 75% calls, 25% puts here today. Clearly leaning to the bullish side. Now, for you bulls, I have, this is just the data talking, right? The options traders are telling us how they're feeling. I have better news from them here today, okay? Ready? Look at the delta range from 0 to 20. Those are the short-dated, out of the money, let's be honest, gambly style contracts that gives us really good information about how the options chain is feeling about the very near term. These are the short-term speculators. And we have a big sample size to go off today. Look at this. 276,000 calls, 53,400 puts. We are seeing today the short-term bullish speculation outweighing the short-term bearish speculation by somewhere around 5 times. That's a really big deal. Now, bears, don't shoot the messenger. We're just looking at data, right? There's no opinion here. This is data. And the data is telling us that the options traders are making bets on a short-term bounce. But of course, as always, they could be wrong. Always be sure to trade responsibly, right? Manage your risk. It's the way forward, I'm telling you. If you got value out of this video, if you like PayPal stock, I will continue to cover it here in the future. Make sure to subscribe to this brand new channel, Roensch Capital Charts, and I'll see you in the next one.